Thanks, Jack. Hey, everyone. Sublease market offers another perspective of the overall condition of the office market itself. Large subleases can impact the market severely, as rising sublease at 1717 Arch did starting in 2003, when sublease rents at that building were at around $20 per square foot. This graph shows the historical sublease availability for the entire CBD. As you can see, we cannot get as close to our peak of 1.4 million square feet in 2003, and therefore we are not as effective this time around. As of year-end 2010, the total amount of sublease space available was approximately 1 million square feet, or 150,000 square feet less than our most recent peak in the third quarter of 2010. The most recent data, as of today, shows an additional 138,000 square feet gone as a result of the Marshall Denny community to Arkansas leases, as Jack just mentioned. Subleases in 2011 should continue to erode as their term burns off or they get released. We're currently tracking 64 available subleases totaling 870,000 square feet. This slide shows that the 6 largest subleases are in 4 buildings, which account for 40% of the total sublease space available. The other 58 subleases are less than a floor and on average are approximately 8,700 square feet. The building shown here, Sunoco is trying to sublease 177,000 square feet of B1 Mill. 2 Liberty has 3 large subleases. Unisys has 2 full floors remaining at the top office portion of the building. Buchanan has almost a full floor just below Unisys. And Cigna has a 17th floor available. At 3 Parkway, AIG has 2 floors. And at 10 Penn, Cedric Claims has the 5th floor available. We've been tracking the net effective return since 1993, which is the net return the landlord achieves after deducting the tenant improvements, free rent, and transaction costs from the rental rate on an annual basis. As you can see on this graph, we've experienced 2 major cycles since 1993. At the highest peak in 2001, the returns were close to $15 per square foot, a number that was probably never seen in Philadelphia, even if we went back 50 years or more. In our last downturn in 2005, we dipped down to $3.65 per square foot. We may be heading back to another $205 per square foot if the most recent trend continues. For the last 6 years, renewals have held the lead for NERs, excluding 2008, when the overall market was slightly in the landlord's favor. In the past 2 years, the NERs for both renewals and relocations went down as landlords had to put more capital into the deal. Even if the tenant stayed, landlords' profits decreased because of large tenant improvement packages, and in some cases, even free rent. This chart shows the breakdown of 2 typical deals in the same building. As you can see, if the tenant is going to move in this marketplace, they need to be enticed with free rent, more aggressive rent, and a significant amount of capital for space improvements. Changes in deal structures this year include 10-year terms going to 12 or even 15 years as tenants take advantage of the market. Free rent is varying widely, with some landlords would rather put more money towards improvements rather than put free rent into the deal and vice versa. The cost to build new space or even renovate existing space has not dropped significantly over the past year, and well-financed landlords are more willing to put money into the space to appease the tenant. Landlords need to stay as flexible and creative as possible to attract new tenants and keep existing ones. Tenants are seizing opportunities now as we trudge along the bottom of this soft market. Even if their lease expirations are up in 2012 or even 2013, some tenants are renewing now or creating a plan to do so. Credit issues are playing more of a role for both landlords and tenants. The landlord's financial strength has become more of an issue over the last year, and Wayne Fisher will delve into this topic in more detail next. The fallout of some companies over the last 2 years, tenant AAA credit is still golden. Securitization has become a problem for both sides of the transaction.